we still have to issue $2.3 trillion of new debt. We're going to have, I believe, 1.8 trillion rolling over from the 10-year bond at 2% rolling into this new 10-year. That's the one that scares me the most.
One of the unresolved issues from Liberation days, you initially had that flight to safety in the bonds, then it went right out the other way. And equities have come back to where they were, but the longer end of the curve for bonds has not. The 10-year and the 30-year are higher at this point. And there's a number of theories behind why that is. But like you said, debt issuance is going to be a big issue going forward, especially if it's more evenly distributed throughout the curve instead of on the front end like it was under the Yellen Treasury.
Japan owns 20% of our freaking debt. China owns 10-ish, 9.5%. Would you really want to piss those people off with tariffs and tell them to go screw themselves? And then you go to the UK and the EU, they own another 13% of the debt. Freaking Warren Buffett owns what? 5% was in the paper this week of U.S. Treasuries, for crying out loud. That's like the hidden risk here. The other guys can't sell those bonds. They could just flood the market, and then their bonds go down 20% and the value, and then we create this downward negative feedback loop. So it feels like everybody's got nuclear bombs of bonds aimed at each other, and nobody wants to pull the trigger because it doesn't. If we destroy the long end of the market, then that's a recession.